Yesterday, something absolutely crazy happened. We saw a massive liquidity injection into the markets, which was a stealth way of quantitative easing. I will show you what happened the last time when we got proper quantitative easing in the market, and so much more when we are going here over our charts. So definitely don't miss out on today's episode. This is a jam-packed stream here that I'm doing here for you guys today, with so much information that I have to share, and we will go over all of these charts here that you're seeing right now. So stick around and let's go. Guys, thank you so much for tuning in here on this Friday. Happy 4th of July if you're tuning in from the US. I would go directly into the charts because I have a hard cutoff time where I have to leave. My girlfriend has something planned for me. I don't know what it is, but I'm going to find out in a little bit. So here the DXY does not a lot today. So I'm actually surprised that the DXY is trading today. I was expecting that the DXY will not be trading today, but it is what it is. It's moving to the downside. I was expecting that. So not a big surprise. It's not doing a lot because it's the 4th of July. Most people are not there to trade. And by Monday, we should see here a proper continuation move into lower levels. I don't want to talk too much about the DXY. Let's jump directly into what actually happened yesterday. So the Fed did an overnight repurchase agreement where they bought treasury securities in the temporary open market. So, and they bought $11 billion worth of security treasury assets. So, and this is just another way to, basically in stealth to say, we just did quantitative easing. We repurchased assets from the US to inject liquidity into the market. So the last time, and just that you understand under what conditions we are seeing quantitative easing. So here, first an explanation what it actually is. Quantitative easing is a monetary policy tool where a central bank, like the Federal Reserve, purchases assets, that's what they just did, to increase the money supply and lower interest rates, stimulating economic activity. It's typically used when standard interest rate policies haven't been enough to boost the economy, especially during financial crisis or recessions. So here the economy is actually stimulated, but they did this because of tariffs and the debt ceiling. So mainly because of the debt ceiling, and also a little bit because of the tariffs that Trump has. So, but mainly because of the debt ceiling. So now, purchase of assets. The Fed buys assets, primarily government bonds, treasuries, and mortgage-backed securities from banks and other financial institutions. So now when they're doing that, the money has to come from somewhere. So how do they get the money? They inject liquidity into the market. This liquidity has to go later somewhere. So it goes then back into the market, which is propping up stocks, crypto, precious metals, forex markets, everything. Now, here was something else that I wanted to show you guys. So here, when the Fed used the last couple of times quantitative easing in the financial housing crisis of 2008, during COVID, and then balancing the balance sheet, and then we have quantitative tightening, but we are definitely not in quantitative tightening right now. So the last time when we, where did this now go? Well, what happened here now? I have to go back. So the last time when we got quantitative easing, if the chart is coming here over now, come on, was the so-called Consolidated Appropriation Act in 2021 at the 27th December in 2020. So yeah, so but it was fully effect in 2021, I think, because that came over Christmas. But this is basically the date when they decided that this act will get approved into the new year. So afterwards, what did Bitcoin do? So we are here on a Bitcoin chart. Afterwards, Bitcoin pumped here within a week. So here, that green candle, a little bit higher actually. I had it earlier properly. I have to do this properly. So from here, okay, let it be 36%, 35, 40%. It's actually 36%. If I do it correctly, it's 36%. In one single week after we got the last time a stealth way of quantitative easing. So now we got yesterday the big beautiful bill approved in Senate and in the Congress, and now it goes into law. I think Trump is signing it today, no, tomorrow or on Sunday, one of the 2 days. I forgot, I saw it earlier. I think tomorrow, or, yeah, it's tomorrow or Sunday when he's signing it into law. So, and once now on Monday the markets are opening, I expect here a massive move in the next weekly candle that we are getting by Monday. Because nothing else can really happen when you prop up the markets, you know. So remember how it was during COVID with the stimulus checks, you know. So this is something similar, just on a smaller scale, where everybody had too much money. And what did they do with stimulus checks? There were memes that people just went and bought Bitcoin with it. And a couple of months later, they had 4 times the money that they had from the stimulus checks originally. Now, when do I expect to see the full effect of this quantitative easing hitting the Bitcoin market? So one sign will be by Monday when we get here a buy signal, stochastic RSI on the weekly chart. And another major signal will be when we break above $112,300, breaking above this resistance and starting to move into a new all-time high. So where do I believe that the quantitative easing effect will stop in the short term, not in the long term, because this is a gradual move over a couple of months where this is actually happening. So the first stop will be all the way up here at the 3.618 level, around $138,644. There is the first stop, in my opinion. This will be a really quick move now with the quantitative easing, most likely taking only a week, 2 weeks, maybe 3 weeks, but somewhere around the end of this month, beginning of next month, I can definitely see us trading around this number here. Something, and if you want to trade with us together, guys, especially the trades that I give you absolutely for free, sign up with the link in the description to BloFin, because if you trade, you can get a Rolex here, you can get an iPhone, a MacBook, an Apple Vision Pro. It's not like an if you if you will get this, you will get this if you hit here the trading volume number. So depending on how much money you have, maybe it will take you a little bit longer, maybe a little bit quicker, but I'm sure everybody can actually achieve at least to get some AirPods or a Switch. So you don't need a lot of money to actually get to that. So use the link in the description below for that. And I will also show you the next trade that I've actually taken here myself. Now, on the daily chart, here nothing has nothing has really changed here a lot on the Elliott wave count. We are here in a small pullback candle, just consolidating on the lower time frames, but nothing the less. I still expect here in the next 72 hours a push into the all-time high, or at least close to it, to get here a proper retest, and then the following day or the day afterwards a breakthrough into a new all-time high. Also here, the bull flag target, everything's still absolutely intact here. We are basically just following the map that I lined out here, where I said over a week ago already that we're going to get a breakout, we're going to get a pullback. After the breakout, then it's time for liftoff. We are basically right now in that small pullback, and when that pullback is completed, we should get another leg here to the upside after the weekend. And something else that I want to mention here really quick again, if you sign up on BloFin and you have a BloFin account with the link in my description or in any video in a pinned comment, and you have deposited at least $100, this is, I do this until, let it be, for another 6 hours. For another 6 hours, if you do that and deposit at least $100, I will still give you access to my self-paced video course absolutely for free. That is usually selling for $1,000, guys. So only deposit $100, and in the description is a Google form link that you have to click and fill out, because only with that I know your email address, and my team can then send you the login information to get access to that course. So if you want to learn properly how to trade and navigate in the markets with high accuracy, as I'm doing it myself, then take advantage of that. Just get a BloFin account with the link in the description, deposit $100, click on the Google link, fill the Google form out, and within 24 hours you have access to this program. Now, this here is one of the trades that I'm personally trading right now. I got in here exactly around the entry level of $108,760. That falling wedge pattern, if it comes into fruition, we should get here move pretty soon into higher levels. The first level that I will be watching close is around $109,500. I'm going to show you in a minute why this is the next major resistance that we need to overcome. And if we break above that, then we should reach here the take profit. That is basically the high from yesterday of $110,540. So, and I'm not just saying that. You see, I have the trade actually open. I started small because I want to scale this trade later in terms of position size. So I started here pretty small, just with $500. You know, so this is right now a $12,300 trade, more or less, here on Bybit. But it's slightly in profit, you know, so because the trade is not running for a long time yet, I have here my take profit, I have here my stop loss, everything already set. And now I basically just wait that we get here that break of this downward sloping trend line of that overall falling wedge pattern. So once we get that break, we go here to $109,500. And in the best case, we just push through that. So something else that we need to have a look at, which is telling me that we are ready to go so much higher than what everybody is screaming, you know. So I still see people screaming right now on Twitter, on YouTube. They say, oh yeah, yesterday, so that was a lower high, so we are going now into the bear market, you know, so it's over. That was the top. The top was last, I think was in May, you know, so the top was in May, $112,000 roughly. We will never go higher than that. So, but what they're not looking at is, even though we went now to almost $111,000, the funding rates are ice cold. So I just want to show you a comparison. The last time when Bitcoin made an all-time high, so I just have to find it here, I think it was here May. So yeah, May 109, 100, yeah, so they're roughly 111. So look at the funding rate. The funding rate was 0.007 Bitcoin at that day. Now, we were $500 short of that yesterday, and where is the funding rate? Oh, it increased actually now, so it's half, but still, it's half than what it was on the all-time high. So there's so much more room to go to the upside, and even at the all-time high, the funding rate was still here in the neutral area. Look here, neutral. We are neutral. We are not overbought, you know, so... And when we are getting here into the green zone, that is where you need to pay attention. Everybody that takes a long position, when we get here into the green zone, is basically coming late to the party. You want to open long positions on leverage when we are in neutral or when we're actually down here. So that is where you want to take positions, and not when we are up here. So like I said, when we're up here, there's more risk involved, at least if you want a bit longer term positions. Short term positions, absolutely fine, but longer term positions up here in the green position, in the green area, wrong area where you want to do that. You want to do that down here when you see the funding rate being half as big as it was at the all-time high. You know, so and that is just one of the major indicators that is telling you that Bitcoin did not hit yet a major all-time high, because when Bitcoin goes into the final all-time high, every single time the funding rate spikes into the green area. So at least I would say the funding rate would go up to like 0.02 or 0.018, so roughly around $200. $200, $300 worth of funding rate. That is where it gets dangerous. That's where you have to pay attention on your trades and potentially close them. Now, when we're going here into the lower time frames, into the 4-hourly chart, so what did I say yesterday? I said if we come back here back into the trading range, I don't believe that we will actually see here a huge move into that. So we get support from the 20 moving average here, which is a super short-term support here, and really important for us to hold. As long as we are holding this, we will get always a bounce back to the upside. And in the meantime, if you see here the next candle returning to the 20 moving average and again seeing a small bounce, this is also a level where I would personally open a position again from. So that is more or less the level where I took the trade from that I have just shown you on Bybit, while we are consolidating and forming here this small falling wedge pattern that you can even see on the 4-hourly chart. So, and also if we close here this 4-hourly candle above the upper range of this overall trading range, also this is a major confluence point for opening new positions into higher levels. On the MDX Algo Scalp Gradient, also here you don't see that the candles actually turning here blue or greenish, yellow greenish. We are not seeing this. They maintain to stay purple, and that is for me also a huge indication that this is just a consolidation with further continuation to the upside. I have seen this many times in the past where price is cooling down based on these gradients and then keeps pushing into the overheated red phases, and here we did not even have a red phase yet. So this is still to come and will most likely be around $114,000, $120,000, somewhere in that range, while the reactor indicator is also making here a turnaround, also signaling that we are here about to get continuation into higher levels. On the liquidation levels, here we are seeing now more longs actually coming into the market while price was coming down. Here, the worst case scenario that I still potentially can see here is a retest of the 50 moving average on the 4-hourly chart, which would be around $107,600 right now, taking out a little bit of long liquidity, over leverage long liquidity that is sitting below us, and from there then push into a new all-time high. The liquidity heat map is anticipating the same thing. So we could, as you can see here, go as low as $107,400. There is the last level above that small void here. We would, after a break of $108,000, basically just go straight down here, touch that, get a bounce, shoot back up here to $111,100, where we have the highest concentration of short liquidity and sell orders concentrated right now. On the altcoin season index, also here we moved now a little bit higher. I told you this yesterday. I said, watch tomorrow. Tomorrow we are going to see here a small spike. What do you see now? We moved up 2%. Actually, is it 2%? 4%, yeah, no, it is 3% since yesterday on the altcoin season index. So tomorrow we're going to move up again a little bit and getting closer here to move out of the Bitcoin season and get finally some moves on our altcoins, because the Bitcoin dominance is now moving up here a little bit, but not much, basically just consolidating and more or less just waiting for Ethereum to make a move. And once Ethereum does make a move, you're going to see here the jump off the cliff in the dominance overall. On the total free market cap, here we have held the $836 billion level. I warned about this, that I would expect another rejection from here, that we come back down to this level and then move here above next week and push into $900 billion. And this seems to be more or less what's going on here right now on this chart. So here with the Ethereum Bitcoin chart, by Sunday, I still expect here a closer move to this upward sloping trend line. And then next week with everything that's going on in the markets, with stealth quantitative easing, with the big beautiful bill being signed, with Ethereum starting to outperform Bitcoin, I expect the big push here next week at some point above this upward sloping trend line, and that will be the kickstart for insane gains in most of the altcoins. So if you want to trade altcoins, guys, go to Bybit, sign up there with the link in the description below. You get up to $30,000 worth of sign up and deposit bonuses. Plus, you can get a Bybit debit card. Now I have my wallet again, wherever my wallet is. Yeah, definitely check it out. 10% cashback on that. I just pay everything with this. Like I explained the other day, if you buy a watch like this here with that card, this is a $30,000 watch. You get immediately $3,000 back when you buy the watch, which is absolutely insane. You know, and you can spend this on a nice dinner or whatever, you know. So yeah, then Ethereum tried yesterday to stay in that pennant here, but got rejected. But this is not really the interesting part here. Right now, when I zoom in here a little bit, what we are seeing is that the point of control was now retaken by the bulls and is holding as support. So if we can continue to stay above here 2,500 and what is that? $2,517, we will get continuation next week past $2,769 in direction of the $3,000 mark. But we need to hold for this, the point of control. This is the longest traded volume bar historically on Ethereum right now. And as long as we are holding above that, we will get continuation. And there's no question in my mind about that. Here on the 4-hourly chart, we dropped out of that bull flag formation that we are forming on Ethereum. But on the daily chart, we got something here really interesting. We got here right now a golden cross. The only problem with that is the golden cross is not looking really being here in a good shape, because the 50 moving average is already pointing down. Usually when we get a golden cross, the 50 is here going in an upwards trend, diverging from the 200 moving average, and the 200 moving average is slightly turning around while the 50 keeps going higher. So now we have the 50 basically going sideways, which is not bad, but we need here now a continuation pump to turn the 50 more to the upside to maintain that golden cross. So things that are potentially able to help is a golden cross on the 4-hourly chart, because you're going to get a trickle down effect. It goes from the 4-hourly into the 12-hourly, and then that will help the daily to maintain that golden cross, because the price will be at a much higher level than here. For example, not at the technical target of that bull flag, but somewhere around $2,700 would be a good start to change direction of that golden cross on the daily chart. So here on the 4-hourly chart, currently the stochastic is, the RSI is going to the upside, which is a sign that most likely with the next 4-hourly candle we pump back into the bull flag. That will lead to that the stochastic will turn around, and also here the 50 will come up and continue its trajectory for a crossover with the 200 to also create here that golden cross that we are waiting for. Now on Solana, on the 4-hourly chart, we have more or less already bottomed out here on the stochastic RSI with the current 4-hourly candle close. We're going to confirm that the RSI is already slightly turning around here. The MACD is not really looking too bearish, so the next 4-hourly candle could lead to a small move here to the upside. Would I right now open a new trade here? No, I would actually wait and see what the next 4-hourly candle is doing, because if that candle turns on us, you get most likely another chance to enter sub $150 at $147. That's what I wanted to say, and take that overall trade setup that we had mapped out here for a couple weeks, I think already. Sui is one of the other coins that I'm currently still trading. That overall trading setup that I had given here from $2.70 is still intact, but that's not what I want to talk about. I want to talk about once Sui is reclaiming this downward sloping trend line here, that is where you want to enter. I want to have a look quick here. Okay, we have here a nonsense guy in the chat that I need to block here quick. Bye. So once Sui is reclaiming here this downward sloping trend line, that is where you want to enter. The level that I'm looking at to add to my current trade that I have is here, $2.96. Once we get a reclaim of $2.96 with a 30-minute candle close, this is where I'm gonna add to my current trade and trade this all the way up here into the resistance of $3.45 approximately. So here I give you here that setup. Let me see here. So this is more or less the setup. So you have here 16.5% more or less move to the upside with a 5% stop loss more or less. Risk to reward ratio is absolutely fine. So and this is the next trade here for Sui. Also here a golden cross is coming up. If this current candle stays green, then this will mark a bottom candle, and that means the next candle will push here back above $2.96 with continuation past $3. The next one is Link. I'm also still in my Link trade. Also here we are getting a golden cross anytime soon. Maybe we have to wait here another 2 or 3 4-hourly candle closes to be sure. When the stochastic is bottoming out, but the RSI is already slightly turning around. And if we get here in the next 4-hourly candle a bounce to the upside and a really nice juicy green candle, something like this here, then also the MACD will bounce off with the trend line of the signal line and will signal continuation into higher levels. So currently where we are at is a good level still to enter this trading setup if you did miss out on this. Here all the way up to $15.24. Then the next one that I'm looking at is Render. Render has consecutively here on the 4-hourly chart put in higher lows since we had formed here a lower low. And as you can see here, higher low, also here a higher low, and overall forming an ascending triangle. That ascending triangle target is all the way up here at $3.86, 87 cents approximately. I have to put the line here a little bit. Yeah, 87 cents actually. So that's where the target is. So every single time when we come here and touch the upward sloping trend line is either for me a point where I add to a position, or if I don't have a position where I would take the risk to open it. So, but I want to mention here once again, this is the more risky approach to do it. If you want to do it by textbook, then you have to wait for the break of this neckline here, of that resistance line at $3.40 approximately, with also at least a 30-minute candle close. So I like to take a little bit more risk, just for the simple reason that this increases slightly also my profitability, but not forgetting to have in that moment then also a better stop loss. So because here, if I would enter right now or add to my current render position, I would make here 5%, no, actually more than 5%. How much more would I make on this trade? I would make 7% more on that trade setup alone. The next one is ICP. So why render and ICP? Because they are using the Ethereum layer, the ERC20 layer. And what did I tell you guys? Everything will pump when Ethereum pumps. So it is, like I said, a matter of days before we're going to see here a massive pump on Ethereum. And I want to position myself right now when I get a chance to it to start building small positions that are going to scale when Ethereum starts outperforming Bitcoin in the next coming days. So an ICP is another good example where we see massive expansion when Ethereum is running, like over here. So here that move from that low, oh well, give me this. So from that low here to the top here, there was a 30% move in less than 5 days. You know, so here 4 days, 16 hours, 12 hours, yeah, in 4.5 days. In 4.5 days, we got here a 30% move. So I see something similar happening when Ethereum starts outperforming Bitcoin. So that's why also here you have more or less here an ascending triangle. And when we are getting here closer to the upward sloping trend line here on the bottom, that support line, that is where I either add to the position, or if I don't have one, I open one. And again, the proper way to trade this would be by textbook here, around the neckline at $5.05, where you enter this, because also you have here a converging downward sloping trend line. So that adds another layer of resistance to ICP, and you want normally to make sure that this is broken, because then you know for a fact that we are moving here into higher levels. Now, I have another 5 minutes, guys, 5 minutes. Hammer me in the chat with coins on the Ethereum layer. They have to be ERC20 coins that you want to see me charting here right now while I'm still here. Do this in the chat here. I'm going to wait, guys. I'm going to wait while I'm adjusting a little bit my AC because it's getting too cold here. So let me know what I should have a look at really quickly, because we're roughly, 100 people here live right now. I hope over time this will increase again, because I remember that I did a live stream, I think last year, where we had 700 people on the live stream. So, but yeah, this is what YouTube does. You know, YouTube punishes you when you are not continuously every single day making a video, you know. So, and yeah, that's why I'm now here only with you 86 guys, 90 guys, but that's absolutely fine. So if nobody is here sending anything, guys, that's fine. Thank you so much for tuning in here. That was a quick update. I will be back tomorrow. So don't forget, smash up the like button, hit the subscribe button, hit the notification bell, and bye-bye.